All right, let's get started with today's deep dive. And today we're taking a look at South Indian Bank Ltd. and really getting into their recent financial performance. We've got a whole bunch of sources to pull from for this one. We've got their Q3 FY25 reports, press releases, official letters to stock exchanges, even a presentation they put together for investors. We're really trying to cover all the bases here.
It sounds like we're going for the full 360 view then.
Exactly. By the time we wrap up, you'll not only have all those key numbers, but you'll also understand what they really mean for the bank's strategy and, how they're trying to reach those big wins. Speaking of big wins, one thing that jumps out right away is their profit.
Yeah, you can't miss that. Right off the bat, we see this record-breaking profit. South Indian Bank just posted their highest ever quarterly net profit. We're talking a cool R's. 341.87 crore for Q3 of fiscal year 25. That's almost a 12% jump compared to the same time last year.
Wow, okay, that's a serious jump. But you have to wonder when you see a profit surge like that, is it just a lucky quarter or is there something more strategic happening behind the scenes?
Well, that's what makes this deep dive so interesting. A single quarter could always be a fluke, but when we dig into the details, a pattern starts to emerge. One of the biggest factors driving this growth is their loan book, especially in the retail segment. They've seen a massive spike in their housing loan portfolio alone, like 63.9%.
That's a huge increase. Makes you wonder, are they taking on too much risk by going so heavily into retail loans?
And that's where their strategy gets really interesting. They're not just handing out loans to anyone. We see a similar increase in their deposits too, especially those valuable, low-cost CASA deposits. That stands for current account savings account, by the way. It's basically where people keep their money for day-to-day transactions. So those deposits tend to be much more stable, less expensive for the bank to manage.
Oh, I see. So they're bringing in more money at a lower cost and then lending it out, which drives up their profit margin. That makes sense. But the real question is, can they keep this up?
That is the million-dollar question, isn't it? To understand that, we need to look at their Vision 2025. It's built around what they call the 6 Cs: capital CASO, cost to income, competency building, customer focus, and compliance.
Okay, so it's like their checklist for success.
Huh.
But what are they doing with these 6 Cs that's different from other banks? What makes their approach unique?
Now that's the key. Let's take competency building, for example. It's not just about general training. They're laser focused on getting their employees ready for the digital banking world. They're investing heavily in technologies that streamline all those processes, making them more agile and efficient than the competition.
That's how they're handling this big shift towards digital transactions. In their investor presentation, they mentioned that almost 98% of their transactions are happening through digital channels now.
Exactly. And this digital push is a key part of what they call their frictionless process goal. It's all about making banking as seamless as possible for their customers. For example, they've launched new products like Quick FD for online deposit openings and UPIT plus one credit. It lets merchants get their UPI payments faster.
So by going digital, they're not only attracting tech-savvy customers, but they're also cutting down on operational costs. It's a win-win. But does this mean they're neglecting their traditional branches?
Not at all. They're actually optimizing those too. They're giving branch staff new technologies and focusing on those high-value customer interactions. They're basically reinventing the role of branches in this new digital age.
Now, that's a smart move. They're not just abandoning what they already have, they're making it work in this new landscape. But what about the future? What kinds of challenges and opportunities do you see coming up for them?
Well, competition is definitely a factor. They're not just up against traditional banks anymore. They've got those nimble fintech players to worry about too. The ones who are changing the rules of the game. And then there's always the unpredictable macroeconomic environment.
Right, those are some serious challenges. But what about the flip side? What opportunities can they leverage?
Now that's where it gets exciting. Think about the booming middle class in India. That's a massive market that's hungry for financial services. And with more and more people using digital financial services, South Indian Bank is in a perfect position to capitalize on this growth. They're even exploring strategic tie-ups and co-lending partnerships with fintech companies, expanding their reach even further.
So they're not just trying to avoid the competition, they're embracing it and using it to their advantage. That's really forward thinking. But hold on a second. This push for frictionless processes, does that mean we're going to see job losses at their branches? Is that part of their vision?
It's a great question, and it's definitely something they're thinking about. They're putting a lot of resources into reskilling and training their employees, getting them ready for these new roles in the digital banking world. So it's not really about job losses, but more about shifting focus and skills.
Okay, that's good to hear. It sounds like they're trying to bring their workforce along with them on this journey, not just leaving them behind. But how does all this connect back to their overall financial health?
Well, remember those 6 C's we were talking about? Cost to income is a big one. By streamlining their processes both digitally and at the branch level, they're reducing their operating costs. And this is reflected in their improved cost-to-income ratio, which is a key indicator of how efficiently they're running things.
So even with all this spending on technology and training, they're actually becoming more cost effective.
Yeah, exactly. They're playing the long game here, investing in their future while strengthening their financial foundation.
That's impressive. But what about the risks? They're growing fast, exploring new partnerships, pushing into uncharted territory. How are they managing all that risk?
That's where their risk management framework comes in. They've got systems in place to assess and manage all sorts of risks: credit risk, market risk, operational risk, even cybersecurity risk.
So it's not like they're just winging it, they're being very calculated in their moves.
Absolutely. They have a whole team of risk management experts, and they even bring in outside experts for independent reviews. They're not taking any chances.
Well, that's good to know. But what about those fintech partnerships? Those can be pretty risky too, right?
They can be. But South Indian Bank seems to be approaching these partnerships strategically. They're being very selective, choosing partners who align with their vision and bring something valuable to the table.
So it's not just about following trends, it's about finding the right partners to help them reach their goals.
Exactly. And these partnerships aren't limited to just lending. They're also looking at collaborations in the liability space, which could help them bring in new deposits and diversify their funding sources.
Wow, they're really thinking outside the box. But with all this talk about growth and expansion, we can't forget about the need for a solid capital base. How is South Indian Bank making sure they have the financial resources to fuel all these ambitions?
That's a crucial point, and it's something they've been very proactive about. Their capital adequacy ratio, or CRR, is currently well above the regulatory requirements,
Yeah.
which means they have a lot of flexibility.
So they're not overextending themselves. They've got a strong foundation to support all this growth.
That's right. They've been raising capital through different means and optimizing their risk-weighted assets, making sure they're well capitalized for the future.
That's good news for anyone thinking about investing in them. But let's switch gears for a second and talk about something that's becoming more and more important to investors these days. ESG, environmental, social, and governance. How is South Indian Bank addressing these concerns?
You're right. ESG is a hot topic these days, and for good reason. Investors are looking for companies that are not just profitable, but also responsible and sustainable. And South Indian Bank seems to be taking this very seriously. They've developed a whole framework for ESG that covers a wide range of initiatives.
Like what, for example?
Well, they're investing in renewable energy sources, promoting energy efficiency in their operations, and supporting projects that have a positive social impact.
So it's not just about greenwashing, they're actually putting their money where their mouth is.
It definitely looks that way.
Yeah.
They even have a green deposit product that lets customers put their savings towards environmentally friendly projects.
That's pretty cool. So customers can feel good about where their money is going. But how can we be sure they're actually doing all this?
Transparency is a big part of their ESG strategy. They publish detailed reports on their ESG performance, so stakeholders can see what they're doing and hold them accountable. They've also aligned their reporting with international standards, which makes their disclosures more credible.
So they're not just talking the talk, they're showing their work.
Exactly. They're showing a real commitment to ESG, and investors are definitely noticing.
Now, before we move on to the final part of our deep dive, I want to touch on one more thing that contributes to their success: their leadership team. A company is only as good as the people at the top, after all.
You're absolutely right. Their leadership is clearly a driving force behind their vision and strategy. They've put together a team that combines deep industry knowledge with a forward-thinking mindset.
Let's take a closer look at some of the key players. First, we have their managing director and CEO, Mr. P.R. Seshadri. He's been in the banking industry for over 3 decades.
Yeah, he's known for his expertise in retail sales, distribution, and lending. He's held leadership positions at some big banks before this, so he brings a lot of experience to the table.
Then there's Mr. Dolphy Jose, their executive director. He has a strong background in retail assets and liabilities, branch banking, and strategic partnerships.
He's been instrumental in the bank's growth and expansion, especially when it comes to building those strategic alliances we talked about earlier.
And we can't forget about Mr. Anta George, their chief operating officer. He's been with South Indian Bank for over 28 years.
He's a veteran. He's been a key player in their digital transformation efforts. He knows the bank inside and out, and he's helping them navigate this new digital world.
Sounds like they've got a real dream team. But it's not just about the top executives. They've also built strong leadership teams in key areas like technology, credit compliance, and risk management.
Right. They've made sure they have the right people in the right places to execute their strategy and manage everything effectively. It's a well-rounded and experienced team that's driving their success.
As we get ready to wrap up this part of our deep dive, I want to bring it back to you, the listener. We've uncovered a lot of information about South Indian Bank, and it's clear they're making some bold moves, embracing digital, forging new partnerships, prioritizing sustainability.
But what does it all mean for you? How do you make sense of it all?
That's the big question, isn't it? We've given you the pieces of the puzzle, but it's up to you to put them together and figure out what it means for you.
Are you impressed by what you've seen so far? Do you believe in their vision? Do their strategies fit with your own investment philosophy?
Those are the questions you need to be asking yourself. We've talked about a lot, record profits, loan growth, those digital initiatives that focus on ESG. But there's one piece of the puzzle we haven't really touched on yet, their investment strategy. It might not be as exciting as, say, digital transformation, but it's a crucial part of any bank's success.
You're absolutely right. A bank's investment portfolio can make or break them. It really tells you a lot about their risk appetite and their long-term vision. So let's take a look at South Indian Bank's investment approach and see what we can find.
From what I've seen in the reports, it looks like they're taking a pretty diversified approach, spreading their investments across different asset classes.
That's a smart move. They've got a mix of government securities, corporate bonds, even some equities. Diversification helps them manage risk by not putting all their eggs in one basket.
It also tells me that they're not just chasing those high returns, they're balancing the need for growth with protecting their capital.
Exactly. And that fits perfectly with their overall strategy of building a sustainable business. They're not just thinking about the next quarter, they're thinking about the long game.
I also noticed that they're paying a lot of attention to the duration of their investment portfolio. Can you explain what that means and why it matters?
Sure. Duration is basically a measure how sensitive an investment portfolio is to changes in interest rates. When interest rates go up, the value of fixed income investments like bonds tends to go down. So by managing the duration of their portfolio, they're reducing their exposure to that interest rate risk.
So they're not just looking at potential returns, they're also thinking about how those investments will perform in different economic conditions.
Exactly. They're trying to optimize their returns while managing risk.
Yeah.
And they're not afraid to adapt. They're always watching the market and making changes as needed to keep up with those ever-changing financial conditions.
Another thing that stood out to me was their approach to balancing SLR investments with non-SLR investments. Can you break that down for us?
Okay, so in India, banks are required to hold a certain percentage of their deposits in government securities. These are seen as low risk, but they also usually offer lower returns. Those are your SLR investments. Non-SLR investments, on the other hand, can include things like corporate bonds and equities, higher potential returns, but also more risk.
So how is South Indian Bank handling this balancing act?
They seem to have found a good balance, holding enough SLR investments to meet those regulatory requirements while also allocating some of their portfolio to those non-SLR investments to boost their returns.
It sounds like they're walking a tightrope.
It is a balancing act,
Hmm.
but they seem to be managing it well. It all comes back to that philosophy of prudent risk management and sustainability.
Okay, so as we wrap up this deep dive into South Indian Bank, I want to bring it back to you, the listener. We've looked at their financials, we've broken down their strategies, we've even peeked into their investment portfolio. But the big question is, what does it all mean for you?
That's the key takeaway here, isn't it? We've given you all this information, but it's up to you to decide what it means for your own financial decisions.
Think about your own investment philosophy. Are you looking for stability and steady growth, or are you more comfortable with taking on more risk for the chance of higher returns?
Think about your financial goals. Are you trying to build long-term wealth, or are you more focused on generating income?
By looking at what South Indian Bank is doing, you can see how different investment strategies can play out in the real world. You can see the potential rewards, but also the potential risks.
And hopefully this deep dive has given you a better understanding of how banks work, how they manage risk, how they make those investment decisions.
So what do you think? Is South Indian Bank on the right track? Do their strategies resonate with you? We want to hear your thoughts.
Remember, there's no right or wrong answer when it comes to investing. It's all about finding what works best for you, your goals, and how much risk you're comfortable taking.
The most important thing is to stay informed, keep learning, and never stop asking questions.
Because the world of finance is always changing, And the more you know, the better prepared you'll be.
Thanks for joining us for this deep dive into South Indian Bank. We'll see you next time on The Deep Dive.